What is going on, guys? Albert here. I am sure that going to the supermarket, you have realized that prices are getting a lot higher compared to last year. In this video, we're gonna talk about what is going on. I am very excited about this video and I want to provide as much value as possible, so I want to keep it short and sweet. First, we're gonna quickly talk about what inflation is. Then, we're going to discuss what is going on with inflation in the US. After that, how inflation may affect the markets. And finally, what can you do to protect yourself against inflation? Before we begin, please don't forget to smash that like button. I would really appreciate it since it would help me a lot with the YouTube algorithm, and don't forget to subscribe to my channel. First of all, let's begin by understanding the basics of inflation. According to the IMF website, inflation measures how much more expensive a set of goods and services have become over a certain period, usually a year. On average, inflation is about 1% in the US. So for example, in a normal economy, we would expect that if you buy a bag of peanuts for $100 in 2019, the price would rise by 3% the next year, meaning that you would pay $103 in 2020 for those same peanuts. Things are not looking very pretty. According to Jack Dorsey, which is the CEO of Twitter and Square, hyperinflation is coming. Hyperinflation usually means that inflation is reaching 50% each month over time. I am not sure if the economy of the US will get to this point, but I am thinking that it seems pretty scary given the loss of purchasing power that many people will have if that actually happens. Now, I believe Jack Dorsey is being a little bit exaggerated, so let's take a look at the numbers to see what is going on. According to the US Bureau of Labor Statistics, the 12-month percentage change of the Consumer Price Index, which is a measurement of inflation, currently shows an inflation of 5.2% compared to last year of September 2020. If we drill down a little bit, we can see that the category of food and home rose 4.5% compared to last year. And more specifically, the category of meats, poultry, fish, and eggs has risen 10.5%. So here it is, folks. Here's the explanation of why prices are really high when you go to the supermarket and try to buy your chicken and steak. On the other hand, fruits and vegetables have only risen 3%. So now you know, if you want to save money on food, you have to start eating more fruits and vegetables. There seems to be several factors affecting the rise in inflation. One of them called demand pull inflation, which happens when there is a high demand of goods, but at the same time, there is low supply for that good. For example, the scarcity of computer chips. However, it is interesting to note that when this type of unbalance is not that big, is one of the main reasons why having a moderate amount of inflation, such as 3%, 2% in an economy is very healthy, because it means that the demand for goods is just a little bit greater than the supply. And this is how economies grow. However, in this case, we have a big spread between the demand and supply of chips. Now, other factors that affect inflation could be cost push inflation, meaning that the costs of production increased because of higher material costs and wages. And these costs then are passed to consumers. This happened when the price of lumber for houses increased in early 2020 and had an impact in the housing prices, thus resulting in inflation. Another reason could be the increase in money supply, which is when the total amount of money available in the economy is increased. Basically, this happens when the Federal Reserve prints money. For example, in efforts to relieve the economic slowdown due to COVID-19, the Fed printed a lot of money. In a Mint article, we can see that the Fed printed $3 trillion between February and June of 2020, which is a lot of money. Now, what does money printing and the stock market have in common? Well, it seems that a portion of the money created by the Fed to supposedly drive down the interest rates went straight to the stock market, which explains why the market has not stopped soaring since the pandemic. And here's where we answer the question of how inflation may affect the markets. Well, even though right now it all seems to be going incredibly well for the stock market, the factors that we just mentioned may lead to a higher inflation. Basically, if the Fed keeps printing money. Even though we do not see the consequence right now, the problem with inflation is that when prices of goods rise, it increases the input costs for production. meaning materials and labor. Also, it can increase the costs of borrowing money, meaning that for companies that want to pursue capital projects, then the cost of those projects become higher. Now, on the stock market, this reduces the expectations of earnings growth, which in turn puts pressure on the stock market to go down. So now, what do we do with this? Since everything indicates that inflation is coming, what can we do now to protect ourselves against inflation? The best way to protect ourselves from inflation is by investing in asset classes that tend to outperform the market during inflationary climates. Now, traditionally, gold has been one of the best hedges against inflation. Since gold is a physical asset, it tends to hold its value for the most part. Other alternatives are other commodities, real estate investment trusts, or investing on the indices such as the S&P 500. Now, another asset class has become very hot lately, and you guessed it, cryptocurrencies. This is another asset class that is gaining a lot of momentum in the world, and I believe that it can be a great way to hedge against inflation. Bitcoin is also known as the digital gold. The bad thing is that its price is very volatile. If you're planning to hold it for a long time, then I believe that its value is going to keep increasing since each day more and more people are adopting cryptocurrencies and it's gaining more acceptance in the market. If you guys found any value on this video, I would highly appreciate if you smash that like button, subscribe to my channel, and I'll see you in the next video.